Welcome to Opal TV. My name is Matthias Knapp. More than anything else, all economies, developed or developing, depend on commodities. And since the beginning of civilizations, humans have unearthed and traded commodities. So I'm therefore extremely excited to go deeper into this with John Collis and Dr. Tom James, both from TradeFlow Capital Management in Singapore, who both have over 35 years experience in this sector. So let's look at the different options investors have in commodities. And I think we can group them broadly into 6 categories, how investors can participate in commodities. So number one, there's direct investment in physical commodities. That means people can buy, store, or trade physical commodities such as oil, gold, silver, or agricultural products. Then, number two, investors can engage in commodity futures and options. That means derivatives trading. Number three, they can engage in exchange traded commodity products. And these could be ETFs, ETNs, mutual funds, but also commodity stocks and equities. Number four, investors can engage in private equity and venture capital focused on commodities. Number five, they can engage in commodity hedge funds. And then number six, investors can also engage in trade finance. Now, conservatively, commodity trade represents about 25% of world trade, or about 4.5 trillion per year. US dollars, that is. Now we have Tom to go really deeper into this. So, Tom, tell us, what is trade finance and how exactly is TradeFlow Capital delivering alpha and delivering an edge to investors there?
When John and I looked at problem back in 2016 through industry, we learnt about what is now called the trade finance gap. And so, we believe, when there is a problem, if you can build a solution, you can develop a business, if not an interesting thesis around investing into the problem and making a return for investors. So we looked at the problem around a subset within the commodity industry. This is trade finance within small, medium-sized enterprises. So these are typically turnover of less than 200 million and moving bulk commodities around the world. It's very different from what most people might think of as trade finance, which there's a lot of publicity around trade receivables, invoice financing, if you like. We're a long way away from that. We're at the very beginning of the transaction, really enabling physical trade to move across borders. And we looked at this issue here, which has really arisen from the cost of traditional banks in the sector acquiring customers and keeping them. They have a certain internal cost per customer, and they've got to earn certain revenue. So if you're a smaller firm, it's very difficult for the banks to help you and assist you. So there's a bit of a niche there. When we looked at the issue of why banks couldn't lend, it was quite clear that in all of the transactions that they had turned down, the underlying transaction itself was good. So we focused on the physical transaction itself, and in the end created a non-lending strategy. I guess that's the key differentiator. We are an asset-backed, non-lending, and over-collateralized strategy. So this has made it a very safe and, in fact, an investment-grade quality investment for counterparties, for investors.
And Tom, and I think with that also comes a totally different risk management, right? Speak to us also about that.
That's right. In terms of being scalable, we wanted to make this as big as possible, give as many investors as possible access to this trade as an asset class. So to do that, it took us 2 years in order to develop the necessary legal infrastructure and fintech infrastructure, so a digital platform, in order to onboard counterparties, the SMEs themselves, and also process and review those transactions, creating a very systematic process, I'd say, to the investment strategy. And that was that was necessary. Otherwise, as a principle, sitting in between suppliers and buyers, we have to handle hundreds of pages of documentation for everything, all the trades that we're doing. And so that's only possible if we could digitalize the whole process.
Okay, now we have John Collis, who is going to talk to us about the different products and solutions TradeFlow Capital Management has built over the years.
We run two funds, one denominated in US dollars and one denominated in euros. And each fund deals only with commodity trades in that currency. So that there's no currency risk or hedging that FX hedging that needs to be done. There are a number of ways of getting involved in the funds. We do normal traditional finance equity investment into the funds, and these are open-ended segregated portfolio funds in the Cayman Islands. And then we also developed a medium-term note for some of our investors who couldn't invest directly into equity, and they could only invest into investment-grade products. So we went to Kroll Bond Rating Agency in New York and asked them to rate a note that the fund would issue. Initially, they rated it as BBB+, and then on the re-rating, after the review, it was re-rated as A-. So we have an A- note that the fund has issued, which is a pretty good investment grade and reflects the strategy and the risk management of the fund overall. Then we've issued a number of shorter-term notes on regulated exchanges in Switzerland. And these are on DeFi exchanges, so that they can be invested in through stablecoin or through other investment vehicles, so cryptocurrency vehicles, but on a regulated exchange in Switzerland, and that's the Obligate exchange. And then now we're just about to launch a feeder fund in Abu Dhabi that will allow people to invest directly with cryptocurrency and stablecoin into the funds, the equity of the funds themselves. And very shortly, we've been able to, over a period of nearly a year and something, working with Lloyd's of London and underwriters, be able to offer a new share class that will be ultimate protection, and that will offer a capital protection element so that ultimately there's no downside. It's a protected product, not capital at risk, but capital protected.
How precisely will the capital protection work?
Capital protection is by way of an insurance wrapper on the fund that protects the investor against any downside after a period if at the end of the term of the insurance that the NAV was any lower than what they invested at the time they went in.
Great. And this is super innovative. Can you also tell us about the expected returns that you're offering to investors?
Well, our returns have been very, very stable over the years. And in the year to December 2024, on the equity in the US dollar fund, that was 8.7%. And on the Euro fund, that was 7.8%. And we would expect, of course, that the return on the ultimate protection would be slightly lower, but it would be in a range of about 6 to 7%, we hope.
Okay, back to Tom. We touched briefly on the risk return profile. And that's really interesting because I think you combine attractive returns that have really a strong component of stability together with real diversification benefit. So tell us, why do investors work with you in the first place?
Well, with the movement in interest rates over the last few years, we've seen quite a lot of volatility in fixed income funds and returns. And if you look at our already 7 years track record, the return profile of our strategy is very much an alternative to fixed income. And in fact, we have been told by some fund of funds that invest in us that we're used as their alternative fixed income strategy, basically, with the benefit, of course, that we offer massive diversification from traditional assets. We're completely diversified from equities, from normal fixed income. We're not even actually sensitive to interest rates on the downside. So that's also helped our strategy in 2000. We maintained returns even when interest rates were like at zero practically. And again, because of our focus on the SME sector, we're finding no pressure to bring rates down as we start to see easing of rates both by the Federal Reserve and also the ECB. That's just a factor of liquidity in the sector that we've been focusing on. 7 years, $3.5 billion of transactions at least. We've onboarded almost 2,000 SME counterparties from over 18 countries and invested in over 35 different types of commodities. With hundreds and hundreds of commodity transactions on our books at any one time, it means that we offer huge diversification. And again, we're not lending money here. We own the commodity through perfection of security, as the lawyers would say. We actually own the commodity during shipment and storage, and we have the financial technology and systems. We're able to track where that cargo is, and also, where it is and how it is. And so we've had zero defaults over 7 years, and managed the risk well. And that's where the rating agencies have come in and rated us initially at BBB in 2021 for senior debt, and then we were upgraded in 2023 to A minus, and now we have A minus stable outlook, and that's because of the systematic approach and the digitized approach. So we have very strict policies and procedures, and through the over collateralization model and ownership model, we've been able to get through COVID, which was an unprecedented situation for all markets, not just commodities.
It's really interesting what you're doing to include cryptocurrencies and stablecoins, etc. I was wondering, was it the cryptocurrency community that pushed you into that, or how did you come up with the idea to basically cover that universe as well?
I think it was a push and pull factor matter. So we were aware that there were a lot of potential investors who had invested into cryptocurrency and were looking for places where they could put their cryptocurrency where it wouldn't suffer the volatility of just holding it on the crypto markets. And then equally, we noticed in some of the regions where the fund is engaging with SME enterprises that there's some hard currency liquidity issues among the physical currency. So, for instance, in some countries, even though the counterparty, the SME, may have good money, the banks in those countries can't get hold of the currency, whether it be dollars or euros. However, if they can do the transaction using stable coins, which are pegged 1-to-1 with the fiat currency, that becomes a very useful alternative to enable these SMEs to actually do business and get paid and pay us.
Just looking from the outside, I don't think you're one of these traditional trade finance shops that's more bank-like, right? Involved with lending, etc. You're really much more of a fintech. You touched on this already a bit, and John, so explain to us more, what role does technology really play in what you do, and how much of a lead have you built in terms of comparing yourselves to any other competitor out there?
The biggest problem with trade finance overall has been the lack of scalability. That's something that John and I could see from even the traditional lenders in the market, and also even some of the alternative lenders that were coming in. Many were taking a similar approach, sort of a client credit relationship that required lots of people, and it wasn't truly scalable. Many of the funds that we have observed over the years kind of peaked at, say, $200, $300 million. And there would seem to be a glass ceiling there, which, has meant that the asset class as a whole, hasn't been able to truly show itself, to investors. It's been quite hard for investors to get to and access trade. So we wanted to really look at a major and really scalable solution, which could handle many billions of dollars as a strategy, and offer still huge diversification in terms of the portfolio makeup and construction. The only way to do that as a fund manager, we're not a trader, we're a fund manager, so we have even thinner margins than the commodity traders, was to digitize. So from 2016 to 2018, we spent 2 years to build enough technology and acquire enough technology such that we could get started. And we could see the direction of travel in the industry was to digitize. We've seen the ICC, International Chamber of Commerce, and their Digital Standards Initiative, and many firms looking at trying to digitize. What happened, though, in 2020 in COVID was, with the complete lockdowns, all of the couriers, like the DHLs, the FedExes of this world, couldn't deliver the pieces of paper that were critical to allow the offloading of shipments, of cargoes, of insurance documents, certificates of origin, etc. And so from 2020 onwards, we've seen quite a speeding up, shall we say, of that digitization, particularly from shipping companies and port operators and logistics, trucking operators, etc. So the amount of data that's out there has massively increased. And this is brilliant for our business model and strategy, because that's what we need. That now means that we, thanks to the digitization around the world, our strategy is getting more and more scalable on a weekly and monthly basis. We are now also introducing artificial intelligence. We had AI from the very beginning in order to read information and documents, extract that information so that our models could then quickly and effectively calculate could we invest in a particular commodity trade, and how much we can invest in that trade. Now we're looking at AI to actually drive decision making in the future as well. It's called AI agents, where they have reasoning, etc., and can actually perform basic tasks. So technology and digitization is all heading in the perfect direction to allow us to scale, like trade finance has not been able to scale in the past.
when it comes to cryptocurrencies and stablecoins, that investment in cutting edge technology that the fund has done by itself and with its partners has meant that we've been digitalized and blockchain enabled from the outset. So it was 7 years of track record being able to integrate with all the different APIs and procedural models that enable investment in and out. We're now right at the forefront of enabling trade using things like stablecoin and also processing the documentation and the hybrid documentation in a digitalized form so that investors and counterparts are always aware and always able to manage their trades safely and effectively with the fund.
What do you recommend for somebody who is interested in learning more about your way to engage in trade finance that's non-lending, that's cutting-edge fintech, and includes all the different innovations when it comes to cryptocurrencies and stablecoins?
First of all, please go on our website, the TradeFlow website, and also check out the informational videos that are on there, and our interview, of course, with yourself way back at the start of this journey. But also then, when you've had an opportunity to look at that material and understand, please register on our portal. Register your interest, come on through, and actually look at the track record, because you can see what's there. 37 different commodities, 7 years of trade, 3.5 billion of transactions, and only getting bigger.